What's going on, buddy?
Not much. Everything's good here.
All right, Jamie, how you doing, buddy?
Well, I'm on the dark side of the moon, and hopefully my mic is working properly now. But it was a Texas Christmas, but looking forward to getting back to the West Coast pretty soon here.
Yeah, it won't be long for you. Unfortunately, I made the move for good down here, but it's I'm kind of enjoying the change, but probably not for long. Just wait for the summer to roll around.
Right on, and thanks everybody for attending the webinar today. As Scott said, the last one of the year. So I'm ready if you
Yeah.
are, Andy.
Yeah, I think I'm ready. And guys, I appreciate all you guys taking the time out of your holiday schedule to. It's actually I'm impressed with the turnout tonight. So thanks everybody for coming in. Going to share with you some it's gonna be more of a kind of a laid back end of year webinar. We're definitely gonna get into some good stuff. I think some stuff that I've learned over my 18 years of trading that will really help you going into the new year. And I'll talk more about this as I show you the agenda coming up. But for now, before I get in trouble, let's take care of the legal issues here. Just want everybody to know that this is for educational purposes only, okay? We are a content provider. Nothing that you see or hear today should be construed as investment advice, and if that is what you're seeking, move on to a registered broker or an RIA. But we're here to have a little fun, show you some cool alerts, some cool stuff, pass on a little wisdom, and hopefully make you better traders. So with that said, let's move forward and talk about the agenda that we have for today. And like I said, I wanted today with the action, Jamie, like it's been lately. It's a thin crew on Wall Street right now.
Yes, it is.
Kind of random price action. Some of the alerts may not work as they do during the heart of of trading, and yeah, I just know through experience there's certain times of the year that's very difficult trading, and year end can be normally what you get is what's called a melt up, and it's low volume, and it's just difficult especially for day traders. So I wanted to take the time today to not so much focus on all these alerts, although I did create one that's going to help you, I think, with looking for January effect stocks, and I think you guys are going to like that. But for the most part, I kind of just wanted to pass on, some stuff that I learned over the years, and Jamie is going to do the same. And we want to really want you guys to participate if you can. If you have any questions, chime in. If you have any charts for us to look at, if you any questions about the software, just join in. I think I really want this to be a kind of a laid-back webinar this evening. So with that said, the agenda is going to be, we always talk about the market recap. We'll go over the spiders, the Dow, the Qs, IWM, and then we'll talk about that for a little bit, and then we're going to move on to Holly recap. There's not a whole lot to talk about Holly. One trade that me and Jamie will reflect on is the one in GOLD, gold, because I have a few things I want to add to that as far as the stuff I saw on my other alerts and top list. Then I'm gonna talk about. I'm gonna let Jamie talk about the Holly recap and maybe explain why you're not seeing a whole lot of things from Holly this time of year, and he may add some stuff about the spiders and the volume that he's seeing. He made a good point to me as we were prepping for this video. It's like, saw a huge sell-off yesterday, but it wasn't really on that much volume, and he's absolutely correct. I mean, usually if you see a red candle like you saw in the spiders, yesterday, it would be accompanied with a pretty big volume bar, and Jamie was pointing that out to me, and it was a nice point that he made. Okay, and then we're going to talk about the New Year's plan, and before I get onto that, let's talk about the market. I'll go through these things I'm going to talk about here when I come back, but I kind of do want to minimize my window here and bring up the spiders, and and I'll also look at the Qs and IWM. And Jamie, if you have anything to throw out while I'm talking, just be sure to interrupt me. And let's move into what we've seen. Over the past month here, we've talked over and over again about these ranges, that were broken, especially this one right here when the market kind of basically broke out, pulled back, as we mentioned it might do in some of our webinars. Steve was wise to point that out, and sure enough, it held that level. And nice move, in the SPY out of this break off and then break out and then pull back and then just kind of catapulted it back up. The diamonds is even more exaggerated. This one didn't really even pull back. As you can see, this thing just kind of broke out and could not even pull back down to the breakout, just kind of consolidated sideways for a little bit. It just pushed higher. This going back to November when they broke out, and then just continued higher and higher. Yeah, I'm going to have more to say about this as we talk about going into the new year, because these are some really extreme moves. Looking at the IWM, once again, just huge breakout here, and then kind of going sideways. Hasn't really done a whole lot since the second week of December, and there's probably a reason for that, because you do have probably a lot of tax law selling going in the non-performers of this sector that has been kind of weighing it down, and why you didn't maybe get another move in this as you did in the Dow. But an interesting level right there. Now that I pull this up, I'm going to go ahead and talk about that. That is some major support there. It tried to break down there today, took out these 3 wicks there, and corresponding to this high wick going back over here. So a major level of support, tried to break down through it today and put in a little a doji. And very much like the spiders, look at the volume here in the on that sell-off day. Just not really pronounced. Nothing like the volume that you saw on the breakout. Look at this huge volume coming up here. Now, does that mean we're going to keep? There's another volume bar right there. But Jamie was correct. Just not a lot of volume in the market yesterday, and even going back to the spiders, I think you're going to see the same thing. Just not a lot of volume on that big red candle. In the past, look at this big red candle over here. Look at that huge volume bar. And I've seen this really over the last 7 or 8 years. Usually when you see a red candle like that, it's accompanied with huge volume. So, does that mean anything? No, because I'm not going to say it doesn't mean anything, but price action is the only thing that matters. And right now, the markets are holding up. We tried to break down further today, and once again, the spiders kind of put in a spinning top, almost a doji, kind of right at this level of support. Going back over here, you'd think it would have held this level, tried to get above it today, but could not last and pulled back down. So I don't want to spend a lot of time on this because it is that time of year, but I think the market, we only have one more trading day left. I'm not expecting a whole lot, so we'll see what happens. But what the new year brings is, boy, it's anybody's guess, because we have had a huge move, and I'm going to talk about that in a minute, but first I want to get Jamie's input on what he's seeing in the overall market, and anything in particular.
Hey,
kind of.
Andy, we're right. We're on the same page there. And seeing that significant move yesterday on light volume, you have to ask yourself, okay, are there not enough sellers, or are there not enough buyers? But the bottom line, it's 6 of one, half dozen of the other. The volume is historically light during this period between the Christmas holidays and New Year's. So, it is to be expected. I've never been a big hunter, even though I grew up in Texas, just not really my game. But it's a great analogy to use when we're describing the markets. If you're hunting for a certain animal and it's the end of the season and you're only allowed to take smaller animals, well, then most people aren't going to want to go do that. And the same thing applies here with trading. There's just not as much opportunity during this time period. The volumes are going to be light. Everybody's still off in the Hamptons, up in New York. Everybody's just enjoying themselves. So really, until everybody gets back in the saddle, so to speak, after the first of the year, that's when the activity is going to kick back in. You know, it's something that we've seen over and over again. You know, I've been watching the market since '92 or so, and it's just that's the name of the game. Volume is light during this time period. When we do get into the Holly recap, we're going to notice some very interesting things. How did I know the volume was light while it was happening yesterday on the SPY? You know, we've got a cool little window that can help us with that, whether it's an indice that you're watching or any single symbol, whether it's a stock, equity, ETF, simply doesn't matter. So I'll pull that up and kind of, you know, back it up, and we'll take a look at that history from yesterday just to give everybody an idea, and then we've got a real good way to fold that into today's webinar with that gold trade that we'll get into here in a little bit. Okay.
Well, Jamie, if you want to right now, probably as good a time as any for you to go ahead and take the window. And if you're not ready, yeah. I could ramble on some more. But
hey, not a problem. Let's go ahead and get Holly knocked out of the way here. Give me 1 second.
Okay. No problem. Well, actually, while he's doing that, I'm just going to show you. No, go ahead, Jamie. Jamie, no problem.
Yeah, can you see my screen now?
No.
Are you viewing my screen now, Andy? Hello.
I'm not seeing it. Am I losing you?
I think. Okay, so I've only got Andy L. and Scott Olson.
If you can't, Jamie, I can just keep the screen. There you go.
Okay,
gotcha.
is it good now?
Yeah, it's good. Can you hear me?
Perfect. Yes. Okay. So before So before we get into Holly, what I'm going to do here, and everybody has to bear with me. I'm working on a fraction of the screen space that I normally do. So it takes me just a second longer to locate things I need. All right, so first I want to pull up this little guy right here. Maybe some of you already have this window in your arsenal of trade ideas things. Maybe you don't. But if you don't have it, we'll gladly drop it into the chat window here at the end of the webinar. Drop that cloud link in there for you. But this is the SPY Watcher, all right? So what we're going to do here is we're going to go back and look at the history yesterday. So we change the date here. And we'll just kind of start it off at, I don't know, we'll back it up to 9:30. Everybody keep in mind, I'm still on Pacific time. So while that history is loading here, let's just take a look here real quick at the intraday for yesterday. Okay, so everybody can see the nice little sell-off that we had right here. Started, you know, pretty much on the open and kind of capitulated down here at 10:10 Eastern time, right? So this little area right here, 9:55 and before. So I'm backing it up here a little bit here. Let's see here. So that should be, actually you're going to have to go forward a little bit. 1 second. Okay, so 10:15 is what we need here. Okay. I'm operating in 3 different time zones right now. Okay. So once again, this window looks very busy, but it's really quite simple what's happening here. Obviously, the window is only looking at the SPY, and what we've got in this window here are 2 different strategies. We've got a red one and a green one, right? So for the the bullish side, simply check off every bullish alert that we have. It's the exact opposite for the downside, every bearish alert. And then we're focusing just on one symbol here, in this case the SPY. However, This window can be any type of watcher that you'd like it to. You know, whatever the symbol is, you can plug it in and use it in this capacity. So, you know, here we are. This main fall right here was around the 945 area. So if we kind of go back here and look, what I've done here, and of course 1 minute is my favorite volume metric to look at because it is the smallest time frame that we currently scan at Trade Ideas, 1 minute. So here I have the 1 minute filter for volume installed as a column. I'm not mandating any minimums or maximums. I just want to see the volume in real time as all these events unfold. So this is right in the middle of this down move here. And as we see all of these events unfolding rapidly, you know, and we can see the time, how frequently we're being fed information about the SPY. But more importantly here, we can see these values here, and just to give everyone an idea of what they're looking at here, in the 1 minute volume or the 5 or the 10 or any of those family, any of our family of volume filters, 100 is normal volume for that time frame. And we can see here all these values, they might be popping a little bit above, but they're all staying relatively low the whole way down, right? And so, you know, when we get to the bottom, sometimes we'll have a little capitulation and the volume will spike. But, you know, being aware that this was a low volume move, you know, it gives you an idea of what to expect, you know, how swiftly is the current flowing. Because if you think it's flowing softly and you jump in, that's not going to be good. And then if you expect to get carried down river and it's not doing anything and you jump in, that's not going to be good either. So just being able to realize that volume is low helps us temper our expectations. You know, it seemed to me, and Andy and I were laughing about this earlier, all the people that I keep in touch with, whether it was the Trade Ideas chat room or whether it was Twitter or some of my other companions that I keep in touch with on Skype, it seemed to be that all anybody cared about yesterday was NVIDIA. Oh, I'm so disappointed with NVIDIA today. You know, NVIDIA this, NVIDIA that, when there was a whole other universe unfolding here. I mean, just on the SPY alone, look at what we had happen here. You know, the SPY alone was very tradable yesterday, and what do I mean by that? Well, when we took this first little wick down here and then we started going sideways, look what happens eventually. Now, granted, the move down to the penetration of the range was a little steep, but man, once it unleashed here, it just followed through like it was wet tissue paper. So not only was the SPY a good tradable event like this, but once this occurs, there are other things that do the same thing as well. And you know, Andy's got a nice window that's going to help showcase our range filters, because you know, if you're watching a top list such as Volume Radar yesterday, and let me just pull that one up real quick so I can show a picture. When I'm talking about our range filters, this is what I'm talking about right here. In this column, we're seeing position in the daily range. And whether we have 100 stocks on this list or 1,000, we can quickly resort by that metric. So imagine you're watching the SPY break. You're like, yeah, I don't know if I want to trade the SPY, but once this happens, there's always going to be some laggards. Maybe they're minute lag, 2 minute lag. Maybe they're not even in the S&P. But, you know, we can quickly sort this list to go, okay, let's find stocks that are at or close to their low. And, you know, assuming we were in yesterday, we would have been immediately targeting these stocks with a little bit of daylight, because guess what? They're close to their low, but they're not at their low. And maybe, just maybe, they're going to do the same thing as the SPY does. They might be in the index, they might not. But we all know that, you know, all things flow to the whims of the great magnet, which is the SPY. You know, whether or not they're in it or not, sometimes they go. So the power of the sort here is really what I'm hammering on. We get the information, low volume here, which keys us into the SPY. We see this nice penetration here, and then we want to go hunting after other animals that might mimic this pattern here. and that would be all of these guys at that specific point in time. So a lot of the times people don't really appreciate the power of a top list. Just the ability to resort something by a custom metric, whichever one that is that we deem appropriate at the time, it's a very powerful tool. Now, having said that, let's shift gears here. I'm not going to kill that guy. We might want to come back and look at him some more. But Holly. Holly showed up to the game today, and we had a total of 15 strats, I believe. Or no, excuse me, 8. But 7 of them were long and 1 was short, as you can see here. Now, the trade total was right at 13. And guess what? No surprise, they were all longs today. Where's my blotter? Bear with me with my small screen here. Okay. So here we are looking at all the trades that were issued today. Now, before we go on to those, we can see, I always like to point this out. What was the maximum that Holly was up today? Because we can see on risk off today, down 32 cents. Risk on, down a whopping 18 cents. So nothing to write home about there. But interesting to see that the most that Holly was ever up today was 34 cents. Now, as some of you may remember, and those of you who are new, you know, Holly's going to trade no matter what the market conditions are, whether it's conducive or not. That's one of the allures of Holly, is that she can act as the leader when the market is conducive and there are trades everywhere. She's going to be making those trades, and you're going to be able to see how they're performing in real time. Or she can also be more or less the canary in the coal mine. If you see Holly struggling, well, that's telling you something. You're looking at a very sophisticated statistical model that's having a hard time today. What does that tell you? You should tread lightly today. That would be good advice. So her performance also reflects the nature of the market today and the nature of the market yesterday. If the market is slow and there's light volume, then what do we expect from a statistical model? Because everybody needs to remember, Holly's a statistical model. And if the statistics aren't there and the events aren't firing, well then nothing's going to happen. Now we did have a few trades today, but when we look at the results here, nothing really stands out with the exception of gold up here. Not to say that there weren't opportunities in these other stocks today, but as we can see from the risk on and the risk off, the only one that stands out today is gold. And so here we are looking at the 5-minute chart. Of course, the blue box over here is Holly's entry price, which is going to correspond with here. So let's just draw a line so we can have a reference point here. Okay, so you're watching Holly. She calls this out. Now, I always like to point this out because there's a lot of different ways, there's a lot of factors that we can sometimes stack up on a Holly trade. Number one, we know that it's a statistically weighted trade from the beginning. Nice chart, spit this one out. We go and reference the nice chart. We know that anything coming out of that guy today, 61.1% chance of winning according to the 40 trading day back test. Now, of course, spit out 3 trades today, overperformed slightly, 66.7%. And it's nice when they overperform, but sometimes we get underperformers, which we can see, you know, these guys underperformed today. No big shocker. But when we see this trade come out, I know it's statistically weighted. I like that. That's positive factor number one. Then positive factor number two is this nice clean range break right here at the time of the Holly signal. So that's positive factor number two. Now, we all know that sometimes when the market is stagnant or going down, what do mining and gold and precious metal stocks do? A lot of the times they go counter. So we've got the Holly trade. We've got the nice visual on the range break. You know, Holly's risk was right here on the stop loss. You know, never even really comes close to that. But what was the volume like in gold at this time here? And of course, I had my little window up here, but I think it's hiding behind here, so bear with me 1 second, and I will find it. Okay, well, I tell you what, this is a good learning experience because I'll just show you what I did to get it. I duplicated my little index window there. And what we're going to do here is we're just going to point it to gold because it has the volume metrics that we're interested in. Of course, I'll probably want to remove anything that's not in there. All right, so now this little guy is just going to be taking a peek at gold. However, 740 to 745, 745 to 50, so we're going to go back and look at what was the volume level at 745 as gold was, number one, issued by Holly, and number two, making this nice tidy range break. So what we're going to do is just go back to time frame. We're going to go to historical, and we're just going to type in 745. All righty. So, keeping in mind, 100 is normal volume for any of these time frames, 1, 5, or 10. Very interesting that at the exact same time here, at this entry, on the 1 minute time frame, gold was doing 6.5 times normal 1 minute, well over 3 on the 5, and 2.64 on the 10. Of course, as this increases, it feeds over into these levels. But if you're looking for affirmation, you have what I like to call, you know, a 3-stacker here. Number one, it's Holly, statistically weighted 60+%. Number two, it fits the visual pattern that I like to see, and a lot of other people like these range breaks because, number one, they're simple. Simple. It's about the simplest pattern you could ever hope to trade. And on the third point, by doing this, I can verify that not only is the volume high, but it's very high. 6.5, 3, and almost 3 on the 10. So when you see that and you go through this process, it can be very, very useful. And, you know, a trade can go on just one of these variables. Statistical weight, a chart pattern. Of course, we have to have one of those two things, and then the added volume is just what I like to call, you know, an added bonus, because that's what we want when we're playing pattern continuation. Anything else about this gold trade you want to point out, Andy?
You know what? You did a great job. I love the way you brought in the volume over and showed them that because, yeah, if you'll pass it back to me, I'll definitely have something something to add to that.
Yes, sir. Uno momento.
Unless you're not finished.
Well, you know.
Oh, go ahead.
I don't want to give Holly all the spotlight today because, you know, it is what it is. And, you know, what we try to do with these webinars, you know, we like to keep you guys entertained, obviously, but we like to present quality information. And, you know, Holly has done phenomenally against the S&P in her first year of existence. She's about to be, I guess her birthday is going to be, I think it might be today, Andy.
Oh, really?
We took her live in the last 2 or 3 days of December last year. So whether it's her birthday or not, it's within ±1. So, you know, in the first year of existence, Holly's done extremely well. Couldn't be more pleased, you know, and the good thing about it is we're going to keep enhancing her. More and more functionality coming down the pipeline, more visibility to the traders. We've got brand new functionality in the development pipeline that helps you automate this process that I just took you through. Because, you know, unless you're real familiar with what's going on here, you might be going, well, you know, I kind of understand what he's saying, but you might have to hear it 3 or 4 more times before it really sinks in and resonates. I know that's the case with me. I'm a slow learner, but once I get it down, I got it. And so what we're doing is we're developing some other metrics to help tie all this together so that it will be easier to pick up on in the future. Now, having said that, Holly takes what the market gives, and the market's just not giving out a whole lot right now. So, this kind of correlates back to one of the users I saw in the question panel when we were starting out. He's like, hey, I just signed up for Holly, in the past couple of days, and, I haven't got a whole lot to work with here. And fear not on that, because everybody's feeling the same thing right now. When the market picks back up, can't tell you what's going to happen, but I will tell you this. January is never boring, but even more so with recent macro events transpiring outside of the markets. I don't ever like to guarantee anything, but I can guarantee this. January is going to be very interesting, to say the least, and that should correlate to the markets because, hey, nothing like a little uncertainty out there to kick in some nice volatility, Andy.
Sure. Yes, for sure, man. I'm looking forward to it. I'm interested to see what January brings, and I'll be spending the last 15 or 20 minutes talking about some things to look for, and when January rolls around, let me show my screen. I did want to point out something that a lot of times, when you're trading and you're looking at these alerts and you see something like Holly, I like to look at sectors and see if there's any confirmation, of this trade. And if you were, if you do have trade ideas, you would see. Let me move my box. I cannot grab this. There we go. You would see from the get-go this morning. This was 15 minutes after. This is a top list of all the sectors, in the market, and this is a top list, and I have it. Basically changed from, see, I have mine from change from the close. Okay, so it's sorted from change from the close. So at 8:45 this morning Central Time, which is 15 minutes after the market opened, you would see the Gold Bugs Index was at the top of the list, change from the close. Okay, it pretty much stayed that way all day. But when I see something like that, this is way before the Holly alert or trade, and then at 8:31 this morning, this was pretty much right at the bell, you had ABX coming through the extreme high-low volume. Now this is an alert that the stock has to be doing over 1,000% its normal 1-minute volume to even appear on this alert. And I'll show you where this alert went off. I'll go ahead and just do this. This is the daily on the right side. This is the 5-minute here. Let me just kind of scroll out. One thing great about this software and the charting, and this reason I use it, is because it always shows you a little arrow when you're doing your homework and you're building alerts. You always see a little arrow of where the alert went off. You can see it went off this morning at 15:62, which is basically right here, right out there get-go, and just, nice run, pretty, gosh, right there, 15:62, some nice alpha there. Kind of broke out of this level, looking left. Looking at this chart, looks like it may have, some more to go. We'll see. But, and then a little bit later, what else came through? HMY, another gold play. So it's just a way, guys, I want you to say when you're looking at these alerts, kind of look for confirmation. Look for your same symbol or whatever, same sector as the stuff that you're playing. I see one right there on this turbo breaks, NVIDIA and AMD. There's two semis that have been trading well together. A lot of money has been flowing into those two, although yesterday was a big sell-off. They did rebound nicely a little bit today. But the point I'm making is, guys, look around, let your eyes, examine the full landscape, notice things like sector analysis, other alerts, and then when you have a little more confirmation, when Holly spits out the GOLD trade, okay, it's a strong sector. I see it coming through my extreme volume high-low alerts. Just some added helpful tips there. And when you're looking at these alerts, you can always look around for confirmation. Now, with that said, let me go back to my little agenda here, and let's talk about the New Year's plan. And basically, I'm just going to sit here and talk. There's not a whole lot to show you as far as charting. Most of this is just, like I said, it's just information that's going to help you. Because trust me, I've seen myself and I've seen many traders come into the new year with expectations, what they think the market's going to do, these preconceived notions, and you just got to wipe all that out of your head because it just seems like I've seen so many so many traders blow up in the month of January, and I don't know what it is. I guess it's just ready to put new money to work or what, but they seem to come in with more knowledge of what they think the market's going to do, and they act on that knowledge, and they end up just getting their head ripped off. So I'm going to give you some pointers of what I learned over the years to kind of help prevent big losses in January and hopefully gains. The first thing is it's been a really nice run. This is the second longest, I believe, bull market in history, or is it the third, Jamie? I don't know, but it's gone on for what, 7+ years now. Bull markets don't last forever. That's one thing that's certain. They don't last forever. It's going to change at some point. I don't know when that point is going to be, but you need to be prepared for it. And when you've had the kind of run we've had this year, and adding that on top of the previous 6 years, it's just, it could be just around the corner. So I know a lot of people come in thinking, oh man, it's all this new money, Christmas bonuses and all this new money plans are made in January, all this new money has to go to work, it has to go to work somewhere. But let's not forget about all that money's been sitting in stock for 5 or 6 years now too. They may be willing to sell to all those people that are coming in ready to put those new plans to work. So just be prepared for change, okay? And I put the next point in there to sit and watch. And what I mean by that, I'm not saying don't make any trades in January, but I'm saying you need to do more sitting and watching, especially in the first couple of weeks, because you can learn a lot just by watching and absorbing price action in the market and your alerts, see where the money's flowing. Pay more attention to sectors, and you can get an idea of where the money's going at the beginning of the year. I can't tell you how important it is just to kind of observe the market and try to do that in the first couple of weeks. The market will always be there. Don't think you're going to miss anything if you're not jumping in 5 minutes after the bell rings on Tuesday. A lot of this stuff is very common sense, but you'd be surprised how much when it comes to trading, how much people lose their common sense. I've seen it over and over. So don't try to predict, just react. That's our job as traders, is to react and not predict. Now I'm not saying not have a game plan, but at the same time, let the price action dictate your game plan. So there's a difference between having a game plan, and being and having preconceived notions. Totally different. So don't try to predict what's going to happen, but sit back and just and react. I would really recommend, the reason I do this, because I do a lot of training, I do a lot of sessions for people, and so does Jamie, and we see over and over and over these people just pile up the alerts. I mean, we have a lot on ours because we have to share them with a lot of people, and what an alert may work for one person may not work for the other, so we have to keep a good arsenal of alerts to share with people, because you don't know what style they're trading. But for you, it's different. If you're trading to make a profit, you need to cut back on the number of alerts you're using. Especially after you checked them all out for a few weeks, even a few months. If you have one that's been sitting over there dormant, and you haven't looked at it, hey, get rid of it. It's just noise. It's a distraction, is what it is. So I want you, to focus on if you're using our price alert. Our software, and it's very powerful. We've got some really good killer alerts, but we have a lot of them, and you want to find out what works for you, for your style and your comfort level, and focus in. And honestly, you really shouldn't be trying to look at more than 2 or 3 alerts a day. It's just once you start looking and trying to look at 5 or 6, it gets convoluted. You're going to miss things. So really try to hone in, on the alerts that work for you and specialize in those alerts. This next point is extremely important because you're always told to be patient. Steve actually did a segment the other day on being patient, and I found that one of the best ways to force yourself to be patient is to use price alerts. So in other words, if a stock, if you're looking at a stock and an alert goes off, instead of just picking it up and firing away, and guessing if it's going to keep going, make yourself use price alerts, whether it be on a pullback, whether it's going to be find a breakout, try to stay away from no man's land. If a stock's in no man's land, and what I mean by that, if you look at the, say, 20-day range, and it's right in the middle of it, and it can go in either direction, use a price alert. Say, you know what, I like the prospects of this trade, but I don't want to buy it unless it gets here. I'm going to set a price alert, and what that means is you physically set an alert, so when that price hits that alert, it triggers. We have some incredible price alerts here at Trade Ideas. Trust me, I've used 10 different trading softwares before. Nothing has ever even come close to the price alerts. They're so user-friendly. They're so easy to use. You just click on a chart, right-click, boom, set it. Same thing on a pullback. You find a spot on the chart where, hey, it looks interesting right here, set a price alert. Learn to use those things. If you're not using our software yet, most execution platforms comes with, some sort of price alerts. Learn to use those things because it will force you to make trades when you're supposed to and not be trying to guess. And it's going to keep you from over trading. One of the biggest, biggest killers is over trading. Commissions aren't cheap when you start trading, 100,000 shares a day, and so you need to force yourself to, cut back. And using price alerts is a really good way to do that. All right, now let's talk a little bit about the January effect. And this is kind of a hypothesis. It's a theory kind of based on, and I've seen it. I've seen it in action. I'm not saying it works every year, but I've seen it work a lot. And basically what it is, at the end of each year, you have what's called, it's called tax loss selling. And basically what it is, it's tax loss harvesting to offset the realized capital gains somebody may have taken during the year. So say you had a great trade using Facebook, all year, and you sold it, and you go, oh my gosh, I'm going to have to pay taxes on that. So what they'll do, they'll find the stocks that they were, gotten beaten up all year, and they had some pretty big losses in. So at the end of the year, you'll see, and a lot of times this will start in November and go all the way through December, the stocks will just keep getting beat up more and more and more. And I will pull up charts and show you the stuff that I'm talking about. And then what happens, a lot of traders, they want to be in this stock when it does bounce, but they want to go ahead and incur that loss during the year to offset the gains that they've taken. So you get, and the reverse can be said for stocks that have had a nice big move during the year. A lot of times they will levitate at those levels because people don't want to take their profits, and they want to wait till the new year. So with that said, guys, let me pull up some charts here and kind of give you an idea, what I'm talking about and what to keep an eye out for. And I've actually built a top list that I will share with you. But I'm talking about trades like Sears Holding, just really, of course it gets this bounce today. First Solar, stocks that are just kind of in the lower end of their range. I can go on. Fitbit, I know it had a bounce, I think yesterday too. Actually, it came right back down today. GoPro. Now all these companies, I'm not saying rush out and buy these, but what I am saying is keep an eye on them because a lot of the selling that you see here in the latter part of the year is just due to people taking tax losses. SunPower is another one to keep an eye on, I think. Actually, that was a trade of the week. I think that's still kind of intact. So what I did today, I said, well, shoot, why don't I give them a tool to help them find these stocks? And what you can do is kind of, if you keep an eye on this top list, and what I have it sorted by is percentage change from the open. I'm sorry, I pulled over the wrong one. That's the gold bug. There we go. And I actually have this one sorted by change in volume. And guys, I don't know if you, I know some of you guys were probably in here with the webinar that I did on how to use these range filters. And I want to reiterate, it's amazing what you can do using our range filters. If you just go to configure here, and I'll show you this configuration. But if you go and you just put range, you can pretty much look, actually let me do this, position, there you go, position, look at that, position in 5-minute range, 15-minute range, 5-day range, 10-day range, 20-day range, year range, lifetime range, a lot of ranges. So what you can do is you can use these ranges to pretty much construct any type of chart that you want to. I mean, if you can picture a chart that you like in your head, you can take these ranges and use them to manipulate this the filters and the top list to pretty much show you anything you want to. So what I did, I said, okay, I want to find stocks that have the potential to maybe see some January effect, and that is people buying back some of these really beaten up stocks. So what I did in here, and it's simple, very simple, position in year range, I want a max of 15%. Okay, that means this thing is 15% off, no further than 15% off its lows of the year. Okay, any range is going to be 0 to 100%, naturally. Okay, price $2. I don't want to see penny stocks. Average daily volume 300,000. This EPS is a nice little trick to exclude ETFs. You just put 0.01 in the minimum and a negative 0.01 in the max. And basically, oh yeah, position in 5-day range. So I'm looking at position, even though the positioning in the year range, I want it at a max of 15%, I do want it in the position in the 5-day range, a minimum of 75%. So this is something that potentially is coming out of a range off the bottom. So I don't want to be catching falling knives. Okay, I want them to be showing some sort of an ability to be moving out of off their bottom. So that's why I use position in 5-day range, which means in the 5-day range it's 25% from that 5-day range high. Okay, so let's take a look at some of the charts in here, and you can see what I'm kind of looking for. Just go through. This is a top list. It's going to refresh for you every 30 seconds throughout the day, and I have it set. The best way to do top lists is to live during market hours, because that way, if you use that instead of live always, it's going to shut down at the close. So if you're doing your nightly scan, doing your homework, you can come in and start looking at some of these charts. There's one right there, daily. You can see the volume came in. Maybe you want to keep an eye on. Look at the closing volume on this thing, on this unit. GFI, there you go. Let me scroll out more so you can see how much these things have been beaten up. So this is an alert that you can kind of watch during the first of the year and see these, see these stocks may potentially bouncing off the bottom. I'm not saying, be a bottom fisher and catch falling knives. That's why we're not buying these things as their own 52-week low. We're looking for something that may be coming out, and maybe keep an eye on these, especially if you see some of the bigger boys, coming in, like the Sun Powers, the First Solars, the GoPros, the Fits. Keep an eye on those, because they can produce some nice alpha for a nice few weeks. TV, I thought this was an interesting one. A little Mexican, I believe it's a TV channel. You can see there's a Hillary. They thought Hillary was going to run. They were running up, and then Trump won. It got sold up, beaten up pretty good, and now it looks like it's kind of reversing here. Maybe one to watch. So guys, what I'm going to do, I think this is a nice little filter. I like to use this change in 5 days, change in 10 days, change in 20 days, because I can get a nice picture of what it looks like by looking at this, on a 20-day range there. So what I'm going to do here, guys, is put this in the chat window, and I will label it January. I'm just going to put January effect.
And Andy, you made a great point there about, it's just about finding the stocks in those positions. And that's the thing that gets a lot of new traders is they don't know what they're looking for to begin with. So to simplify things, we have to identify what we're looking for, and then we have to sort through the data stream to find it using trade ideas because, the market stream in and of itself is meaningless. It's just a bunch of information that is meaningless. So, I always like to tell people, look, I look at these 4 windows, get all the trades I need out of those windows, and you know what? The rest of the market may as well not even exist because I just don't care about it. And that's what everybody needs to get into habit-wise is figuring out what you want to go for and then configure the scanners to do that. I hate to pound the simplicity drum all the time, but it really is relevant in trading because it's so easy to get confused. Then we have greed and fear to deal with on a daily basis. Doesn't matter how long you've been trading. It affects the 18-year-old, the trader with 18 years experience. Maybe not quite as much as the guy that's new or been in it for 2 years, but it's always a factor, and it always will be a factor. So it's about having that game plan, knowing what you want to find, and then finding it and sticking to it. And
Absolutely. Yes. Very, very good. Very good point, Jamie. So, guys, yeah. With that being said, another point. If you don't have a tool, an alert, a scanning tool, you really need to get something. Nothing can help you out in January than a nice, good scanning alert system like Trade Ideas. And I know Scott's going to come in here and offer you a discount here in a minute, but I do want to just kind of elaborate more on what we have to offer here at Trade Ideas, because not only do you get this killer software where you can do cool things like I just did this morning on this with this January effect, and you can take that and customize it and even make it tighter if you like. But we have exceptional support and education here. We have webinars every day of the week except Friday in the same time slot as today. We have a daily trading room with Barry Einerson, who does an incredible job. We have over 500 traders in there. That's free to everybody. Get in there and you can see more of Trade Ideas in action. You can see Barry calling out live trades as he takes them and tell you why he's doing them and what he's looking at. I'm not going to go over who the presenter of every webinar. Most of you people in here have been here before, but they're all at one time or another and still are professional traders and know the software like the back of their hand. So you're not alone. We're not going to give you a software and say, here, have at it. We're going to hold your hand as much as we can and help you really work with it and know it. And it all starts, with our webinars and with the trading room, but it doesn't end there. As soon as you subscribe, you get what's free, 1 hour, what we call an hour of power training. That's either with me, Jamie, or Steve. We are selling this training for $99 a pop, and I'm doing a lot of them. People coming back in. I have one guy that I did today. He's on his 4th one, and he's gotten one signed up for tomorrow. That's how much he's enjoying it. Because not only do we go over and we'll create alerts for you, share all our alerts with you, create a layout for you, but we'll also talk to you about strategies, talk to you about market strategies, talk to you about how to use the alerts. So it's really invaluable training. We pride ourselves on it. And it is free. It is free with a subscription. So without further ado, let me bring in Scotty. Scott, you want to come in and tell them a little bit more about the Trade Ideas?
Yeah, thank you. So as a way to thank everyone for attending, we have a discount for you. You can use that code that you see in orange there, Advantage, all caps, to save 15% off your first month or year of premium, or 10% off your first month or year of standard immediately. You can also download a handy little copy of this by clicking on the handouts panel on your GoToWebinar interface, or just click the little plus next to where it says handouts. And there's a PDF link there for you to download that also includes contact information. So the difference between premium and standard primarily is access to our artificial intelligence investment discovery engine, Holly, but it also includes access or unlimited access to our backtesting, event-based backtesting module, the Odds Maker, as well as advanced features that we've been adding, like shareable price alerts, which has become one of the most popular features this year after Holly, and premium windows like the red bar ignore, green bar ignore windows. Both standard and premium cover all of your exchange fees and also include a full hour of one-on-one training, which really makes the standard monthly, the $99 a month version. Try that for a month, get the training. That's the best trial out there because you get a full hour of training as well. The premium version starts at $188 a month or $1888 per year. Both standard and premium, no contract. It's automatically recurring, but you can cancel at any time. Any questions about this at all, just email us, info@trade-ideas.com, or email Jamie or Andy directly. Jamie is jhodge and Andy is andy@trade-ideas.com. If you follow us on Facebook, facebook.com/tradeideiaspro, give that page a like. We post some different content there sometimes. You can also follow Jamie on Twitter. He's QuantBot on Twitter. Our Steve Gomez is Today Trader on Twitter. And Dan Merkin is Trade Ideas 1, and our regular Twitter account is Trade Ideas. Thanks all. Thanks, Jamie. Thanks, Andy. We'll see you on the other side of the new year in 2017. Looking forward to what that brings.
Yes, guys. Happy New Year, everybody.
Yeah, and we'll get the
this up. Happy New Year. We'll see all you guys in the new year.
Yeah. Thanks, everyone. Happy New Year.